Hello, everyone, and welcome to our webinar today titled Financial Management Best Practices for UAE and SMEs, Comprehensive Strategies for Managing Business Finances. I am Rima, Partner Success Manager at Wafeq. Um, Wafeq is a UAE and Saudi-based company offering an accounting solution certified by both Tax and Customs Authority in Saudi Arabia and the FTA in UAE. I'm delighted to be here with you today, along with our guest, Mr. John Casey. Hi, Mr. John.
Hi, Rima, how are you?
I'm fine. First of all, thank you for being with here us today. It's a pleasure to have you.
No,
Thank
thank
you.
you for having me.
Thank you so much. Okay, Mr. John, I would like to hand the mic over to you to introduce yourself to us before we start.
Sure, thank you. So as Rima mentioned, so my name's John Casey. I've been in the UAE for about 6 or 7 years, but most recently and probably most excitingly, joined VirtuZone following the corporate tax announcement and we launched a firm under the umbrella of VirtuZone called Tax Ready. We've seen a period of huge growth, and we've spoken to or interacted with thousands and thousands of companies. So we like to think we have a pretty good idea about what helps SMEs especially.
Thank you so much, Mr. John, for this introduction. Okay, Mr. John, in today's webinar, our objective for today's webinar, we are aiming to equip UAE-based small and medium businesses with a particular strategies to improve financial management, optimize cash flow, and ensure compliance with UAE corporate tax regulations. Participants will learn actionable insights on financial planning, accounting best practices, and using technology to streamline financial operation. Um, Before we start, I would like to confirm with all of the audience that please share us your questions in the Q&A box. And before the end of the webinar, we will have some time with Mr. John to answer your questions. Thank you. Okay,
Sorry, Rima, can I just add,
sure.
with the Q&A box, I'm sure you can all see that.
Yeah.
Send in questions as we go as well, especially if there's something, because I can see the questions as we go, and if there's something relevant that, we'd like to cover during the actual presentation, then I'll address those as we go as well. So just send through the questions as we go through, and then any that we don't answer during the presentation, we'll cover at the end as well.
Sure. We can do this. Thank you. Okay, so I'm sorry. Mr. John, in today's webinar, we're gonna take the webinar through topics. The first topic we're gonna talk about how can you develop a clear financial plan. For the second topic, we're gonna talk about how can you monitor and manage cash flow effectively. Topic 3, we're gonna talk about how can technology enhance your financial operations. Topic 4, we're going to talk about how can you control costs and reduce expenses. Topic 5, we're going to talk about how can you ensure compliance with the UAE tax regulations. So starting together with topic 1, Mr. John, what are the key financial goals any business should have?
Thanks. So look, the obvious one is be profitable, right? Everyone knows that. We all know that. We want to have a successful business that hands us over a nice amount of money each month that we can live happily. But look, the way I normally like to answer a question like this is taking the view of, if someone was to come along and buy this business, I think it's especially relevant here in the UAE. There's a lot of venture capital, a lot of private equity, and many people that are starting companies here in the UAE are actually thinking with that longer or medium term exit. So I think about, all right, well, what would a VC firm or a private equity firm or a buyer want to see, if they were looking at this company to buy? So, look, there are three sort of main things that these sort of equity firms and things look at. One is obviously, is it profitable, right? Given.
Yes,
Two is it cash flow positive? And three is around the growth. So is the growth sustainable, right? And so
correct.
when I look at, all right, there are many other financial goals that a company might have. So, we want to have a margin of X or we want an ROI of this but really it all boils down to do you have a pathway to profit? Do you have sustainable growth and are you cash flow positive?
Yes. Thank you. Thank you so much, Mr. John, for answering this question. Okay, Mr. John, moving together to the second question here. Mr. John, how can you create a financial plan that aligns with your growth objectives?
Cool. So the most important thing, and this is quite a broad statement, and I know this, but you need to have absolute clarity around your business operations and the financials, right? So you can't just go and create a financial plan with no way of monitoring it, with no way of forecasting on how to get there. So I think it's a very simple answer. You need to have proper financial measurement or proper financial structure or reporting structure in place. And when I say that, I don't mean you need to go and build a huge financial model. You just need to have proper accounting or proper financial reporting that you can track. And look, what you need to do, I'm sure we'll talk about how to set goals and things, but you need to have the ability to monitor and to forecast, right? So what has happened and what you expect to happen. And you need to be able to adjust your forecast based on what you've already seen, if that makes sense. So, you build a forecast, you monitor your progression against that, and then you adjust.
Correct. Thank you. Thank you so much, Mr. John. Okay, Mr. John, moving together to the third question here. In topic one, what tools and strategies can you use to track financial progress?
So I'll talk about strategies first because this is when things start to sort of come together. So, if you are looking at a goal of being profitable, right, which I know is an easy thing to say, but the reality for many businesses is you might not be profitable or very unlikely to be profitable on day one. So when you're looking at a strategy, you need to say, okay, well, what are the interim goals that we need to hit to get to a profit position? For example, just using the profitability piece.
Yes,
It's the same for cash flow. It's the same for sustainable growth, right? So what you need to be doing is yes, you have an end goal, but you can't just say, all right, that's my goal, and if I hit it, I hit it. Great. You need to have really really deliberate midpoints across that you can actually track to where you want to go. So it may be that by September next year, I need to have my production cost down to X% of margin, so something
yes,
like that. And people talk about we talk about different tools, how do I actually come up with something to measure that? The one that gets thrown around quite a lot, it's the one that I personally really like, it's called SMART. So specific, I should know that. Specific, measurable, achievable, relevant, and time bound. I don't really like relevant. Of course, it's going to be relevant, but time bound either. But SMART. So for me, the really important one is specific. You can't just say, oh, I want to reduce my cost of production or something like that. Or you can't just say, I want my margin to go up. It needs to be, I want to hit this margin by this date, right? And that gets me towards my end goal of being profitable. Or, if I'm if I've got a high cost of acquisition, right, of customer acquisition, for example, it's a problem that many startups have. You go, all right, well, I want to be reaching this number of customers by this date so that my cost of acquisition is spread across and it's gone down to X number. All right. So, obviously each of these goals will be different by business, but you can't just sit there and go, I want to decrease this or increase this. You go, you need to have something that you can really target, and that tends to shape your strategies around it. Right. Otherwise, you run the risk of it's a bit of a cliche back in New Zealand and Australia. I don't know if it holds up here, but it's called chasing seagulls on the beach, where you just go, oh, that looks good, I'm going to go do that, or I'm just going to, go and do that. But if you have these really well aligned goals, it gives you something to focus on and really stay straight.
Yes, yes. Thank you so much, Mr. John, and thank you for your insightful information here.
All
Thank
right.
you. Okay. Mr. John, now we are moving together to topic 2 in today's webinar. Mr. John, why is monitoring cash flow critical for business success?
I think that's probably the easiest question you asked me today. Look, I mean,
Yeah.
if you don't know what your cash flow position will be in 3 months, then you really don't know if you'll have a business in 3 months, right? People say,
That's
oh, cash is king and da, 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 but no, the reality is that unless you've got a means of paying your suppliers, right, and paying yourself and keeping afloat, it really is the main metric of the day-to-day existence of your business.
Thank you so much, Mr. John. Okay. Mr. John, the next question, what strategies can help maintain positive cash flow for the businesses?
Okay, so I'm going to talk about a couple of broad rules that everyone should have in place, but then but the sort of generic things that you can probably get on Chat GPT if you go and pump that question in. But also some of the things that I've seen really I'll get a bit more detailed. So especially when it comes to the UAE. So I think the main rule is you need to be able to build up I'd say at least 3 to 6 months of emergency fund, right? Even if you've got your cash flow forecasting down pat, it's absolutely perfect. If your cash flow forecasting is perfect, then the only risk you have is the risk of a surprise, right? And it's the surprise that normally creates the undoing. I mean, think of COVID, the companies that had a bit of reserve there are the ones that really got through. That's an extreme example. More realistic at the day-to-day, you were leasing an office and then there was floods and you had to, pay for something until your insurance paid out or something. It's that kind of stuff that you need to just have in the background, so that if there is a contingency plan needed, you're there to fund it. And look, even like I said, even the people who are, fantastic, or even the companies who have very simple businesses, easy cash flow, even they will have that cash reserve just ready to go in case in case something goes wrong. And don't be tempted to just go and spend it on something on a nice to have, right, for the business. It's there for the emergency. It's there to keep you afloat. So that is the main sort of generic thing I would suggest. When it comes down to something that you see more in the UAE, the UAE does have this sort of culture of delayed payments, right? And so one of the most common questions, or one of the most common issues that we have from our clients is, yeah, that's great, I've got all this work, but my client's just not paying me. Now, it ranges, right? So it all depends on, and this is where we'll get quite specific. So what you need to know is you need to have a very clear view of your relationship with your suppliers, but more importantly with your customers, right? If you are dealing with a small business, right, as a customer, yes, easier to build a relationship, but you've got to remember that that small business may also be susceptible to surprises, shocks that will impact their cash flow. There's a higher risk of almost a non-payment or a longer delayed payment on that front. Now, the normal things like, oh, but I've got 30-day payment terms in my invoices and stuff like that. The UAE, we know it's just not really enforceable, right? You can put whatever you want in your payment terms, and they're considered a guide more than anything else, which is especially for people that are moving from, like I say, Australia and New Zealand, where everyone, feels a duty to pay on time. It's a very different approach over here, and sometimes that can be a bit of a shock, and you've got to be really prepared for that. I think at the other end of the spectrum, so small business, you need to really understand the business that you are taking on as a client. You need to try and establish really early around the expected payment and the behavior that you can expect for that. The other end of the spectrum, when you're dealing with really large clients, so whether it's government entities, banks, telcos, things like that, what you need to remember is that, and this is the same everywhere in the world, that those companies normally have quite large procurement functions, right? And so you might have a really good relationship with the person that has approached you to do the work, or approach you to buy the product, but that doesn't mean that you'll get paid on time, right? And what I do often see is some clients will deliver work or deliver goods, and they haven't even been onboarded as a supplier with one of these large organizations, and that process alone can take months. We're actually working with a client right now who didn't realize that they couldn't be onboarded unless they actually moved their entire business out of a certain free zone into the Abu Dhabi mainland, right? So not only have they gone and delivered a whole bunch of project work, but it's only when they've sent the invoice and they've gone to get paid that the procurement team has said, no, we can't onboard you because you're in this certain free zone, or you're over here or something like that. So this person has actually had to effectively open a new business just so they can get paid for this huge amount. Now, all it would have taken at the start of this process is when they were dealing with this person who engaged them, just asking, look, can I just speak to your procurement team? Just make sure that we're not going to get any hiccups down the line. Make sure that I've got everything and I'm onboarded before I actually go and start this work. I would never assume that because someone has engaged me from a big company, that means that the company is on, that I'm on board with that company. Procurement teams can even come down to personal preference in those teams sometimes. I've worked in the big banks. I've been on the other side of this, and I could be pushing as hard as possible to get someone paid, and someone in the procurement team doesn't like your approach, and so they just make it difficult for you. So again, just stressing the importance to have that cash reserve in the back pocket in case you need to go and fund it. Just one other thing, especially if you are in service industries, make sure that you agree on milestone billing. So you don't want to be in a position where you go and just invoice the whole thing at the end of a project. Always try and agree milestones or midpoint billing. At least then, if say they're going to take 3 months or 4 months to pay, at least you've got one invoice in their system that you can start chasing and get payment chasing up. Yeah, look, those are some things that maybe you wouldn't just get out of ChatGPT if you put it all the normal stuff, like look at leasing instead of buying, all of that. Yeah, go to ChatGPT and you'll get those answers. But I think when it comes to the UAE, those are some real specific things that you need to be aware of.
Yeah. Yes, thank you so much, Mr. John, for answering this question. Okay, Mr. John, moving together to the second question in topic two. How can you identify and address cash flow gaps before they become an issue?
Yeah, so I'm going to start sounding like a broken record, but you have to have a good forecast process in place. Unless you can see a sort of pathway over the next 3 months, and then you really don't know where your business is going to be. You need to make sure that you identify those gaps on a spreadsheet, or in your financials, right? Because then you can plan around them. You need to make sure that you remember things like post-dated checks. When will those be coming out? Lease payments. All of this stuff needs to be put together so that if you need to delay payments to suppliers. I can't believe I said that given the example I just used, but you need to make sure that you are managing this well ahead of time, because if you get to the end of the month and all of a sudden you find the hole in your cash flow, that's too late.
Yes, thank you. Thank you so much, Mr. John. Okay, Mr. John, now we are moving together to topic 3. Mr.
Sure.
John, what are the benefits of using cloud accounting software, such like Wafeq, for example?
Yeah, so throughout, I've been referring to forecasts and to clarity around your financials. I mean, something, a program like Wafeq, it takes the error out of it. So if you're trying to do this yourself on a pen and paper or on a spreadsheet, or please don't be trying to run this yourself out of your own bank account or anything like that. You just might not get it right, and if you get it wrong, then it creates lots of issues for you. So, Wafeq, for example, accounting software, I would say is the way that you run your business. The financials really underpin everything that you do, and so you need a program like Wafeq to actually manage this, to track it. Going back to the very first thing we talked about, which is, you monitor what's happened and then you adjust your forecast going forward. You need to be doing all of that in a centralized software. Otherwise, you're just, scrambled.
Correct. Thank you so much, Mr. John. Okay, Mr. John, moving together to the second question here. How can automated invoicing help reduce late payments and improve cash flow?
So yeah, so there's a couple of things here. I mean, obviously, it saves you time. But look. So I'll talk about the high level first. So the high level is having this integrated into your accounting software and into your forecasting and everything. Just it eliminates that mistake of eliminates the mistakes and eliminates the manual labor as well of having to actually put everything in. So everything's already there in your financials, in your statements, in your forecast, so you can actually see everything there. So that's at the high level. On the operational level, it's so much easier to monitor and to chase for payments and to obviously manage payments out. But I would say the most important thing is getting those reminders in. I mean, we all know that, the squeaky wheel, all that kind of stuff, right? If you just keep on hammering about the invoices that you've sent out, you are more likely to get paid, especially if you have that one, if you've got a procurement team to commit to a certain behavior in terms of payment, all right? Yeah. Automated invoice goes out, reminders go out, you just keep on hammering, because the hardest part and the most important part for cash flow is just getting that money in from clients.
Correct. Thank you so much, Mr. John. Okay, Mr. John, for the third question, what financial management tools can provide a real-time visibility and accuracy?
Wafeq. Correct answer.
Thank
Yeah,
you.
look, I'd actually say, if you are looking at financial management tools, or you're using financial management tools, then that's 80% of the job done, right? I would be more concerned if you were not, if a business owner was not using any tool, so they weren't using Wafeq and using it for their forecasting function or something like that. If right now they were sort of running it out of a spreadsheet, that's kind of almost the worst case. Worst case is doing nothing. Next worst is trying to run it yourself out of a spreadsheet, because you just don't have that structure around it. Accounting software like Wafeq, that is exactly what you need. I think for most businesses, you probably don't need, well, especially most small and medium businesses, you don't really need more than that. Unless you're getting into a really large, multiple projects, then maybe you need to be setting, more sort of building your own sort of stuff in Wafeq, for example, or customization. To be honest, you're only doing that if you've got 100 projects on the go, right? For most companies, a tool like Wafeq will be plenty.
Thank you so much, Mr. John, and thank you for mentioning Wafeq for sure.
It's all right.
Thank you. Okay, Mr. John, we are moving together to topic 4. We're going to talk about how can you control costs and reduce expenses. And the first question here, Mr. John, how can you identify areas where costs can be controlled or reduced?
Sure. So look, the hard way to do this, even if you have good accounting, is looking at your numbers and looking at what's large and going, all right, how do I reduce that? Right. So that is the hardest way to go about it, because you're trying to come up with ways to reduce something that, to be honest, most businesses, you're in an industry where there's probably some kind of precedent or some kind of work done before around a lot of this stuff. So there's actually a lot of public information out there. What I tend to do is there's a lot of data available now around benchmarking. So if I was, I'm in the accounting and tax industry, right? So I can go look at public information, publicly listed accounting firms, and I can look at what their margins are around salaries, around rent, around this, and I compare that to what I'm doing, and I go, okay, there's a bit of a gap there, right? And I use that as a benchmark to say, all right, this looks like I'm doing something wrong, because in many cases you don't actually, you might see a big number and go, that looks too high, but it may be that you're actually outperforming your industry when it comes to that metric, right? So don't just sit there and go, I got to reduce my biggest thing. I mean, yes, normally that's your easiest target, but I would say that when it comes to actually identifying the parts that need to be reduced, don't just aim for your biggest one. Try and get some kind of benchmark or some kind of information to make sure that you're targeting the right thing. And 20 years, well, 15 years ago, we used to, I'm thinking back to my days working in big banks, we used to pay McKinsey and BCG, $1 million to access their database and things like that. You don't need to do that anymore. You can just go and find it yourself and use that to benchmark. I mean, the value for you can, the value that a lot of those huge consulting firms used to bring, and the reason that it wasn't accessible, this sort of information wasn't accessible to small businesses, is because it all sat with those huge consulting firms. But now you can go out, you can search, you can find benchmarks around expenses, benchmarks, industry benchmarks, and I think that's what I'd normally do.
Correct. Thank you so much, Mr. John. Okay. Um, Mr. John, here we have a question. What strategies can help cut unnecessary expenses without compromising quality?
So one of the again, I'm trying to think of the answers that you wouldn't get out of ChatGPT. So there are a couple of things here. And yeah, one of the ones that is becoming very, very common, you can call it labor arbitrage. We just call it outsourcing, right? There, in many cases, you can get a established or a top sort of level of service without actually going local or without actually having to hire someone full time. So there's kind of two ways you can outsource. One is you're outsourcing to somewhere cheaper, right? And you want to get the same level of service. Yep. Always a risk that you won't get that same quality level, but if you do enough research and meet enough of the people before you actually outsource, that's fine. The second one is kind of fractional outsourcing, right? So, you can now, and this is where I'm going to plug myself. So plug our own business. So apologies, but using it as an example. So, you can go and hire a CFO or an accountant, and that's going to cost you 5,000 dirhams a month, right? Or 10,000 dirhams a month, or 25, 30 if you're hiring a CFO, right? Or you can just go to a fractional outsource. So you come to VirtuZone or Tax Ready and, hire an accountant for a fraction of that, and you only use what you really need, right? And for many small businesses, yeah, that's all you really need, right? So you don't need to go hire an accountant. You don't need to go hire a HR person. You don't need to go hire a technology person, right? So it's becoming more and more common, this sort of call it fractional outsourcing, where these companies are. It was never really big in the UAE. UAE, especially in the accounting industry here, was always very traditional. But now, obviously, tax ready. It's what we do. We've had thousands of clients come on saying, just for that sort of monthly reporting and filing and things like that, and a bit of guidance when needed, setting up on Wafeq, for example, so that they can, do their cash flow forecasts, get them up and running, and then, and then you don't need to worry about paying someone 5,000-10,000 dirhams a month just to monitor it when you can do it yourself.
Yes, thank you. Thank you so much, Mr. John. Okay, Mr. John, here we have a question also. How can a cost reduction plan improve your overall financial health?
I think this is the second easiest question you'll ask. So look, obviously cost reduction,
Mhm.
when you're looking at your margin, you can lever two things. You can lever up your revenue or you can lever down your costs. Now, I would actually say that a cost reduction doesn't always improve overall,
Mhm.
right? Your overall position. You don't want to, what you need to be careful of is short-terming your business, right? So, you don't just want to go and cut all your costs out and then you realize 6 months down the track that the service quality is completely dropped, or the quality of product is completely dropped, and then all your clients are going elsewhere, right? Now, yes, extreme example, but you've got to be careful, and this is why I sort of talk about the benchmarking, right? So if your expenses or your margin is significantly different to an industry average or an industry norm, right? You need to know why that is, and it may be that you're running a really good operation, and that's great. It may also be that you're under servicing or you're undercharging or something like that. So I wouldn't say that you go and just slash costs, right? I've worked with CFOs who I would say are very one-dimensional CFOs, when that's all they would do is go in and rip out costs, and it's a very short-term strategy, right? So I would be saying, all right, what costs do I need to stay sustainable, and where can I sort of tweak a little bit? Going back to the example of companies that are looking to sell, again, very sort of going back to what many companies are aiming to do in the UAE. It becomes very clear to, let's say you're going to sell to an equity fund or to a buyer or to a VC fund or something. They can see very clearly if you've just gone in just to slash costs to short-term the profit, right? The behavior that they look for, and I say this because they know what a sustainable business looks like, right? So they will be looking at this going, all right, that cost looks too low, what's a realistic number for this? And so you just need to have that focus on long-term profitability or sustainable profitability. Sorry, very long-winded answer of a cost reduction plan. Sure, it can improve your short-term financial health, but you just got to be really careful that you're not, shooting yourself in the foot.
Correct. Thank you. Thank you so much, Mr. John. Before we move together to the fifth topic, I would remind all of the attendees that please feel free to share to share us your question in the Q&A box. And thank you. Okay, Mr. John, now we have reached the topic 5 in today's webinar. It's the last topic here today. We're going to talk about how can you ensure compliance with the UAE tax regulations. Sir John, what are the corporate tax obligations in UAE, and how should you plan for them?
Right. So this is the one closest to my heart. Look, just a high level comment is that the corporate tax regime here in the UAE, I would say, is very accommodating to small businesses. Many companies, especially smaller ones, won't have to pay any tax, but in return, the Federal Tax Authority and the Ministry have put in some pretty strict penalties if you don't comply. All right, so there is a difference between a company that complies with corporate tax and a company that has to actually pay corporate tax. Okay, so the former, compliance, every single company needs to comply with the corporate tax regime. It doesn't matter if you've just opened up, if you've just opened your company, It doesn't matter if you're under the thresholds. It doesn't matter if you've got no turnover. None of that matters, right? You need to be registered for corporate tax. If you haven't already registered for corporate tax, you've probably already got that first 10,000 dirham fine, okay? Unless you've only just opened your company. But if you have a company and you haven't registered for corporate tax, sorry, you'll have that 10,000 dirham fine. The second thing you need to do is you need to be keeping proper accounting records, right? So you need to actually have a set of financial records for compliance step number 3, which is you'll need to file a tax return. So those 3 steps every single company has to do. It's not like VAT where you only have to do something if you're over a threshold. Corporate tax is the complete opposite. So every company has to do those steps. And in doing those steps, quite often you can prove that you don't have to pay any tax, right? But if you're not going to be paying any tax, you need to prove that to the FTA. And you do that by first registering. And then when you file your tax return, you need to supply a set of financial statements. Now, those 3 steps, just to repeat, they apply even if you have no turnover, if you're under that profit threshold. So let's say your profit was under 375,000 dirhams. You still have to
Yes.
go and prove that, right? And that you'll still have that 10,000 dirham fine if you haven't registered yet. If you miss your filing deadline, or if you don't have accounting records, you'll get another initial 10,000 dirham fine because you've failed the record keeping requirements. Then if you can't go and rectify that, you get a further 10,000 dirham fine. Like I said, they're very strict on these fines. You know, I'm still meeting clients who sort of go, oh well, my turnover was only 500,000 dirhams or only 50,000 dirhams this year. So I thought I didn't have to do anything. And sure enough, we go in, we log in, and there's a 10,000 dirham fine straight off, and then we're having to, scramble so that they don't get another one. So look, and there's a couple of questions coming in around accounting, for example. So at minimum, I would suggest that you need to be using an accounting software. If you don't know how to file the tax return, right? And this is where obviously VirtuZone and Tax Ready come in. If you don't know how to file the tax return, that's when you need to come and speak to someone like us. Now, the important thing, right, is there are many different exemptions, right? You need to be filing for the correct exemption, okay? So, for example, free zone companies are not exempt unless you meet certain criteria, right? And they're very strict criteria. It doesn't matter if you're just doing business outside the UAE, for example. That's not an exemption anymore. That's completely irrelevant now. If you fail that exemption, right? If you fail the free zone exemption, let's say you're doing a service-based product, like you're supplying a service, which means you probably won't get that exemption. Then there's another exemption available called small business relief, but you need to know how to go and file for that as well. So many exemptions available, but you obviously, again, you need to be registered. You need to have the financials to back up your position when you go and apply for that exemption when you file your tax return.
Yeah. Yeah.
Tax
Thank
returns are due now for 2024. There are a few buckets that people fall into. Some people had tax returns that were due December 2024, right? They were unlucky ones who basically registered their company in a certain month in 2023. But yeah, if you're not sure when corporate tax returns are due, then you probably need to come and speak to us.
Yes, thank you so much, Mr. John. Okay, Mr. John, what key regulations must businesses comply with regarding VAT and financial reporting?
So for VAT, so the main thing I want to first say is that VAT and corporate tax are completely separate regimes. I always try and avoid talking about them in the same conversation. One always follows the other, never shall they meet. The only common thing between them is the number 375,000 dirhams, but they mean completely different things in each regime. So don't sort of get the two confused. It's just a coincidence, right? VAT, so what you need to be aware of is if you're making any supplies inside the UAE, then you have the option to register for VAT when you hit 187,500 dirhams of revenue or expenses, right? The more importantly is the mandatory threshold. So when your revenue hits 375,000 dirhams, it doesn't matter if you're making supplies inside the UAE or outside the UAE, right? If your revenue hits 375,000, you have to go and do a registration, right? Even if all of your supplies are going outside the UAE. If all of your supplies are going outside the UAE, you're applying for what's called a registration exception, which basically says, yes, I've hit the threshold, but my supplies are all outside the UAE, so I don't have to file returns, and you'll get a stamp of approval. All right, but no one gets to just sit back and do nothing when it comes to VAT, unless your revenue is under 375. All right.
Yeah.
Again, the VAT penalty is pretty tough. The day that you hit that 375, you've got about 20 working days to register. Otherwise, you get that 10,000 dirham fine. That's even if all of your supplies are going outside the UAE. You've got to do that exception registration. Now, they track that by day as well. So the day that you hit 375, the timer starts. The additional risk now that we have corporate tax is because every company now has to file a corporate tax return. We are finding that if we file a corporate tax return for a client and that client has more than 375,000 dirhams of revenue and they're not registered for VAT, the FTA is now coming knocking saying, why aren't you registered for VAT? And they're going to get that additional 10,000 dirham fine. Okay, so you've got to be super aware of this. You know, we're basically going back into the sorry, we're the same as the rest of the world now, right? So tax is a very closely monitored thing across the rest of the world. That was because it was sort of a opt-in regime, you know, it couldn't really be monitored too closely, but now that corporate tax is a mandatory regime for every company, now they have that database of every single company so they can monitor it a lot quicker, a lot closer. There's a question here, VAT is 375K threshold a one-time qualifier. So 375,000 dirhams on VAT is in any rolling 12-month period. Okay, so it doesn't need to be in 1 year. It can be across, let's say from September 2023 to August 2024, you had 375,000, you have to go and register. It's the moment that your revenue hits 375 in any rolling 12-month period. We just had another question about audit. So for corporate tax, so when it comes to tax, you don't actually have to do an audit unless your revenue is more than 50 million dirhams, okay? Or if you're going for the free zone corporate tax exemption, you do have to get an audit for that. Not all audits are the same. If you need an audit for tax purposes, that's different from an audit for a compliance review, different from an audit for a bank request. So I would not be saying just go and get. I wouldn't be saying just go and get an audit, right? I'd be saying if you need an audit, make sure you're getting one for the right purpose. Generally speaking, if you are your tax advisor, us hopefully, will tell you if you need to go and get an audit for tax. Most cases you don't unless you're really getting up into that larger or high upper medium size with more than 50 million turnover. There's just another question here on VAT. So once you register for VAT, are you liable for VAT? So if you're making supplies inside the UAE, once you hit that threshold and you register, then and only then do you start charging VAT to clients, all right? This idea that you're sort of liable for VAT isn't really correct. So, you start charging VAT, yes, it's an extra 5%, but if you're charging that to companies, they get to claim it back, so it's okay.
Right.
If you're just making supplies outside the UAE, right, you do that exception registration, the one I mentioned, and then you don't have to do anything else because you never charge VAT to clients outside the UAE.
Correct. Thank you. Thank you so much, Mr. John. Mr. John, what are the risks of non-compliance and how can you avoid penalties?
Okay.
Yeah.
Sorry, I jumped ahead a bit on this one and answered most of it already. But look, the main one is the registration penalty. So if you haven't registered for corporate tax, you've probably already got that 10,000 dirham fine. You can't get this waived. Okay, so a lot of people, they've come to us in the last couple of months. They go, all right, time for me to register for corporate tax. And we say, well, yep, you should have registered a year ago. You've got that 10,000 dirham fine. And they've said, oh, well, maybe they'll waive it during Ramadan or something like that. And just, no, it hasn't happened, right? We've appealed probably 40 or 50 of these fines under different, excuses, different methodologies, different everything. And they're just saying, no. You need to remember that this corporate tax regime it's basically the UAE joining a global tax process, right?
Yeah.
So the UAE can't be seen to, we can't go and say, oh yeah, we're bringing in corporate tax in the UAE and then not enforce it and start waiving fines and stuff, right? Because we got off the grey list, something that is not very well, everyone knows, well, many people knew that we were on the grey list and now we're off. We're actually also listed in the UN's harmful tax practices, the free zone regime was. By bringing in corporate tax, we actually got off that list. And so that was a huge part, but we can't now turn around and be seen to not be enforcing it, right? So, so unfortunately, these fines are very, very strictly enforced. So non-compliance, yes, big fine for not registering, big fines for not keeping accounting records. That's another really harsh one. Not filing your tax return, you get penalties every month that you're late, right? So that keeps on ramping up each month that you're late. And also, if you do owe any tax, you get charged an interest percentage on that as well. I think it's 14% per annum. So you just, there's not really any, I wouldn't say there's any excuse. When you look at tax regimes around the world, the UAE is pretty friendly and pretty accommodating. Yeah, it's
Yeah.
it's you should just get onto it. I've got a question here. Have you had any cases where the FTA reconsideration request to waive off the penalty was waived? So where there has been, there's only been two, and where the FTA has made a mistake. Okay, so they've taken the license date instead of the establishment date or something like that, and they have got the deadline wrong. Then we've been able to appeal that and just very nicely say, look, you took the wrong date, and we've had those waived, right? But where there was a genuine mistake, so you genuinely missed your deadline, right? There's only been one that we had waived. It was very unfortunate. The owner of the company passed away, right? And we had to provide the certificate to show that, and they waived the fine in that instance. So literally the guy was, had unfortunately passed away, and that was the only one we've been able to get waived. Everything else has been a very strict no.
Yeah. Okay. Thank you, Mr. John, for your time during the discussion. Now we are going ahead to the Q&A part in, in the webinar. So, Mr. John, we have here some of the questions. I'm gonna read it for you here. Our first question: what are corporate tax return due?
Yes. So sorry, I have answered most of these as we've gone. The corporate
Yeah.
tax returns. So it sort of depends on when your first tax year is. And I'll try and explain this. This is not going to make sense, okay? Because the rationale behind it is all dependent on the timing of the law. But if your company was open before June 2023, right, then your first tax period was probably January to December 2024, right? So last year. And your tax return is due now, it has to be filed by the end of September this year. Okay, that's if you opened your company prior to June 2023. If you opened your company in the month of June 2023, okay, so go and check your memorandum. If you opened your company in June 2023, just in that month, you're what we call the unlucky ones. You have to file a tax return for 2023, right? And that tax return was due in December 2024, all right?
Yes.
If you opened your company after June 2023, so 1st of July 2023 onwards, right? Your first tax filing is probably due, was your first tax period ran up to December 2024, so you've got that September deadline.
Yeah.
Companies that are only just opening now, this will be your first tax year, so you're not going to be due until next year. But the main thing to know from this is if you opened your company prior to June 2023, so let's say you opened it back in 2018, it's likely that most companies in that situation, their first tax period was January to December 2024, so they now need to file their tax return by September.
Yeah.
One exception to this, if your company was registered in DWTC, right, Dubai World Trade Center, then you have a different tax year, right? So it goes, basically you need to check your memorandum of association. Everyone else, all the other free zones, the mainland, everyone, you run January, December financial year. If you're in DWTC, you need to check your memorandum because they have a different one.
Yes. Thank you so much. Okay, Mr. John, here we have a question also. One of the audience is asking, what can you advise for those companies who opted to do their accounting, bookkeeping manually instead of using an accounting software?
I mean, well, one thing is you have to actually submit a proper
Statement.
set of financial statements when you do your tax return, right? So you can't just be tracking it in Excel with your own sort of makeup. I wasn't going to go into technical terms, but
Yeah.
the accounting standards that sort of underpin the corporate tax regime here, IFRS, International Financial Reporting Standards, right? So there are specific accounting standards that you do have to use. You know, you do have to set a certain format for filing the tax return. You can't just say, here are my bank statements and here's an Excel file, right? It's got to follow the proper format. And that alone is, you know, getting that format alone is worth the cost of a Wafeq subscription in my eyes, right? Because you can just plug it all in there and print it out and or upload it.
Correct. Thank you so much. Okay, Sir John, also they are asking, do you also agree that all companies should have audited financial statement, especially now that we have corporate tax?
Yeah, so that's one I just answered before. So it's only if your revenue is more than 50 million dirhams that you need to do an audit. So I was saying, you know, you don't just want to go and do an audit for the sake of it. You're just going to make sure you know why you're doing it, because different, you know, not all audits are the same.
Yeah.
Yeah.
Yes.
Yeah.
Yeah. We have a question here. Is there any chance that the FTA may waive off the penalty in the future?
No, like I said, it's we're part of they've made sort of a global commitment, and so they're very, very limited in what they can waive off, unfortunately.
Okay. Thank you so much for your answer. Okay, Mr. John, our last question here, is there any threshold for documenting the transfer pricing in the UAE?
Yeah, there is. There are actually a few thresholds. So think of it as sort of two groups. There is basic transfer pricing documentation, and then there is what we call master files and local files, which is a next sort of more of a standardized way of documenting transfer pricing documentation. So documenting transfer pricing. So and it also looks at who the counterparty is. So if you're doing business with, I'll start at the very smallest level, right? So let's say you have transactions with a connected person, right? A connected person is, you know, your spouse, your child, your niece, your nephew, any associated companies that you have, you know, anything like that. If the total transactions through the year are less than 500,000 dirhams with that individual or with that party, there are no documentation requirements. Okay.
Yeah.
If you go over 500,000 with that counterparty, you have to disclose it in your tax return, right? And you need to say that you basically need to verify that that transaction has happened at market value, arm's length. Basically, there are other thresholds involved in this, all the way up to if you are part of a multinational with global turnover of more than 3.15 billion dirhams. That opens up a whole nother set of documentation requirement. But so between 500,000 dirhams up to 3.15 billion dirhams is sort of the range of numbers. There's a couple of thresholds. There's 2 or 3 thresholds in there which determine how much transfer pricing you actually need to document.
Yes, thank you so much, Mr. John, and thank you so much for your time in today's webinar and for answering all of these questions. Thank you so much.
No problem. Thank you for having me. Again, very supportive of Wafeq. Like I say, we have many clients on your software, so thank you. And if anyone has anything that if they need to file their tax returns, then just go to taxready.ae and we'd love to help.
Sure. Thank you so
Cool.
much. Have a nice
Thanks,
day.
Ryan. Thanks.
Thank you for your time. Bye-bye.
Bye-bye.